The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We got the S&P down 5 points. The Russell is up 0.6 right there. Looking on over at the Nasdaq, it's down 6 points with the Dow down 85. Oil currently up $2, 2% on the day. Oil making some big moves. We got natural gas that is down about 1% right now. We got corn is down 5 points out. It's a little over 1%. Soybeans is flat on the day compared to settlement. Looking on over at Euro dollar, it's currently down 44 pips with Aussie dollar bucking the trend and up 92 pips. Pound dollar down 28, dollar CAD down 37, and dollar Franc up 24. Looking over at Euro yen is down 64 with pound yen down 26. US yen down 22. And gold is up $1.20, a whole $1.20. Looking on over at silver right there. We'll see if gold goes ahead and hopefully fills back in and moves on under its settlement price. It looks like it's heading down right now. Looking over at silver. Silver is up about 1% on the day. Copper is up a little over 1% on the day. And so, each and every day I like to go through and look at potential possible trade setups. And so going over here and grabbing the spread analyzer, binary analyzer, we can look at potential setups right there. We got a 312 on the short side at $33. That's, of course, distance is great, but we got to wait. Okay, we don't want to hop in too soon. Right now we got it at 108. So we got about 22 minutes left till expiration. We don't want to get in there too quick. But it is moving down, so we'll see if it keeps going. But right now, that would be the one I'm going to keep my eye on, is the 1312. Right now, I don't really see anything on silver. We're about inside that 15-minute zone, so we'll see if we keep going down there. But one thing I can even do is I can widen that out if I want to and just sort of see what's potentially coming up on silver, and just by widening out my risk-reward. And I can see there is a 3650 at 20.4, okay? So go in, I can look at silver and see, does that even look like a possibility? Does it look like something I would want to trade? And if it is, then great. And if not, it's not my trade. But right now, of course, that's probably a little too expensive and a little too close, considering it's like 2 ticks away from where the market's at right now. But I have at least a couple strikes that I can watch. And so if I know these are the strikes I'm potentially watching, then what I'll do is I'll click them, I'll open them up, and I'll set them on top of my screen. So that way, I'm ready for them. If I decide to pull the trigger on them, I've already got my analysis done. And that's how you want to do it. You want to have everything done in advance. So then you can focus on what matters, which is trading what you see right there on the charts. And we'll see if it keeps pulling on down. But right now we are moving down. So we'll see, ideally we'll get down to that 1309 or lower level. And but we'll keep an eye on it. We got, like I said, about 20 minutes left on gold. We got about 15 minutes left here on silver. So we have those up. We'll keep watching them as we get closer inside the hour and see if they get any closer for us. One of the cool things that Nadex has done, and I got to show you this because I'm pretty excited about it, is go over here, and it's only in the demo platform right now. It's not in the live one yet. But what they've done is they've added in all of the underlying markets charts. So you can go to underlying indicative, you can click on commodities, and what they're doing, the way they're sort of, I guess, pulling this off is they're using the settlement price. So it's a derivative, because the settlement price is the last 25 trades minus the high 5 and the low 5 and averaging the middle 15. And then that's the settlement price. So they're charting that live. And you could actually go in here if you don't have like a futures platform. You can go here and you can click on this, open it up, get your gold chart open, and if it gives you some little weird error, just close it and try it again. So depending upon what platform you're using and everything, once in a while they mess up when you first click on them. I don't know why. And, that's another reason why I like to have real charting platform. But we'll try silver. Let's see if silver is working for us. Gold wasn't working yesterday either. And, okay, there we go. We got silver. All right, so we can put that one up. We can make it like a 5-minute chart. And I can go into my analysis, and I can get rid of all this weird stuff on here. But let's see. What all do we have? We'll maximize the silver chart up for a second. And pull the pieces together. Come on. There it goes. All right, so we got the silver chart right there. And we got, let's see here. I know I got a lot of things on, but it didn't seem to be acting like I do. Okay, there it goes. It is that. It's the way it draws it up. All right, so I could go in. I could add on, say, like my moving average. I can uncheck these extras here and make that one like 8. And then I'd actually see the moving average being plotted right there on the screen. I can see where it's at. And I have a potential 20.4. So if that's the trade that I want, then I can go on in. And gold is moving down. It's moving pretty fast. So that's good. Anyways, we got 20.4 at 20.382. And now notice, okay, this is settlement. So it's going to be really rounded out. So sometimes the move looks bigger than it is, okay? But move up to 20.4 is just a couple ticks move in gold. Okay, that's not, or silver, whatever. That's not exactly a massive move. All right? But we got about, 12 minutes on the clock for silver right now. And so if you want that one, you can click on that. I'm still going to give it a second, $30. This is more than I usually go for. And, yeah, that's a great profit. But you know what? I'd prefer distance and safety over, an extra $10. So I'm going to give it a few more minutes and watch that one and see what we get. Because silver can, this is Friday, and we're going into the closing bell of the pit. Okay? So just keep all those little pieces in mind. But anyways, once you got that up, you can have your silver chart going. You can move that off the screen there. You can go over here. We could try one more time. Let's see if gold will work now. I don't know. We tried it a couple times. It didn't work for us. And I'm usually using Ninja Trader charts, but the other ones seem to be working okay. So maybe they've got some issue right now with the gold settlement chart. And we even got corn and oil working. So you'd think if we got corn and oil working, we ought to have gold working, right? But, and here's a tip for you, too. If you ever see that you want, like if you want Nadex to add something in the platform, or, if you think there's an error or whatever, just go to my account, go to message us, and you can say, so what I'm going to do is I'm going to submit a little ticket. I'm going to say, the gold Nadex settlement index chart is not loading. I'm using the latest version of Google Chrome. All other charts are working. I'll send that to them. They'll send me a reply. And it's just, let them know. So this is their beta in this right now. So when you give them feedback, that helps them know sort of what to focus on and what to do there. And put those pieces together. So if you did, you probably may have hopped in already on that silver contract as it's been moving on down. And so we got that one on. Gold is just flying on down there. So that one's moving pretty fast. But the silver one, you probably could have gotten right around $15 on that contract. We'll see if it keeps going down. If it does go against us, we'll get out of it. That's the 20.4 is the one we're looking at over here. So, and right there. So now it's down at 1250, 1350, 16. So it's moving up and down, up and down. And so just to look at that right there for you. And it lets you sort of, keep an eye, too, on it. Where's that price at? Where is it settling? And one of the things I figured out as well, if you're just really trying to watch that settlement price, okay, is you can go in and you can choose demo right here. You can open a ticket. All right, so you can actually, let's say I'm trading live, but I want to watch it. I can click on this. I can open the ticket up, and it'll actually tell me the current quote as well right there. So say that's 29.36. And so I could use that as just sort of a way to monitor my position as well, in addition to the chart. and because I know I'm needing it to be lower than at 20.4 right at expiration. Okay. Let's see. Gold's moving down now. It's like it's moving towards the 1309 level. We just broke 1309.9 was the settlement price. Okay, so that's going to be a bit of a, support line. It was resistance earlier in the day. And so if it can break below that going into the close, we should get a nice solid move down. And we'll see here. But just to show you the gold contract, like I said, I got it over here in Ninja Trader. And you see how it's sort of coming up and bouncing off that over and over and over again. Then it sort of bounced on it. It finally broke through it a little bit. And it's just been oscillating right around the settlement price. So if we can get another break below, with some volume, we got a big volume up move right there. See how that happened right there, that big volume spike? That was your clue that market was about to turn around. So anytime you see these, and I talk about these, these are going to be like your big volume reversal points, especially when they're later in the day, around 11 or 12. And so you see that big volume spike. That's a clue that we're probably going the other direction. And as you can see, the market went right there. That's even a potential reversal style trade. I'm always bringing up new strategies and ways to trade things. That alone could be an indicator, okay? Just a volume spike, looking at several markets right around 11 to 12 o'clock. You see that massive spike, you go in, and you could either do, like, say, an in-the-money binary and sell it. You could do an at-the-money, which I don't really like doing at-the-moneys unless I'm holding till expiration, just because of the risk-reward analysis and the ability to, manage stops. Or you could do an out-of-the-money and target the next deviation level, such as the settlement price. So let's take a look at that idea, that concept, okay? So if I go on, and one of the things I can do on the Nadex platform is I can actually pull up the, what we're going to call it, the binaries chart itself. So I could go to commodities binary, I could go to gold, I could go to this daily right here, I could go down to the 1309 right over here, open that up, okay, and then I could look at it like when we had that spike. So we had that big spike, and it happened right at 11:30 or so. We had that, so I could even wind up the charts on here if I wanted to make them the exact same, like 10-minute charts. And then here we go, 11:20, 11:30. That was when my big spike happened, okay? So that big spike happens. What could I have went in and sold this binary for, okay? Well, 11:30, I could have sold it for right around $90. And let's say I'm targeting the 1309 price level, I could put a buyback at 57. I already would have taken profit on that. I would have made $47 on a $10, or I guess $37 on a $10 risk on the trade. So not a bad trade, very simple method, something that you can watch. So just another little nugget for you there. All right, stay tuned. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So watching them close, we'll see where they end up at. And right there, we got the 20.4. Looks like it's heading up. So that one may expire on the other side there. We'll see how it turns out, because it's always going to come down to where that settlement's at the last second. All right, so let's go ahead now, and don't forget you can use those charts on there. It's pretty cool. It's a new feature, something I've been enjoying using. I did take some profits on some of those 1309s that I had on from earlier. I went in and I went short on some. The market ran up. I added in some more actually at 90, but not simply because I was trying to double down, but simply because it looked like the right trade to do. So I was targeting this strike right here. Again, we got that big volume spike, so I went short. It came back down right here. It hit my price of 1309. I bottomed back and captured a profit on the trade. So pretty sweet trade. Again, that you can add in on there and take advantage of. So let's see, right here, let me show you this. Right here. Okay, so I just want to make sure you're sort of seeing what I'm talking about. So that right there, we get that big spike, and it closes down on top of that. So, I mean, that's reversal pattern written all over it, right? And so with that, anyways, we plan on the market to go down. Where do we plan on it to go down to? Well, about 1309.9. Well, there was a strike at 1309. and I could sell that strike again for $10. So risk, which means I could sell for 90. All right, the actual sell price was 90, and when it came down, it actually hit the strike I was targeting right here at 1309. Able to buy that back and make a sizable profit. I did close out, by the way, part of the positions. I didn't close out all of them just in case it kept heading down. So gave me, just a good potential trade right there that I could look at doing. And we'll see, what do we got up here? Anything left that we can do? That one's just really close. I'm not a big fan of that. $39 on gold. And let's see here. That's too close. It's only like, a tick away. So, and it's also on the sell side. And right now we're seeing this big run up in gold going into the last few minutes here. So unless gold decides to do some major reversal, then that is definitely not the trade we want to do. That's the one we've been keeping our eye on, right? Remember, that's the ticket I pulled up earlier, right here. I said, hey, let's watch this one. But I said I wanted to see it get cheaper before we hopped in on it. And I wanted to be a little closer to expiration before we did that as well. So since we haven't seen that happen yet, then I stated, notice now it's flipped to the other side. I have in the money checked on the binary scanner right here. So we got that one left right there. And you can see I sold these at 90.5. These 1309s, I closed out all but two of them. I had two left just in case. Basically, I had enough profit that not only did I cover my risk on the other ones, but I also had, additional profit left over. And so I was like, I'll leave a couple on just in case it decides to close on down. But however, it decided to do like a 3-point reversal here in the last few minutes. So it's probably not going to close at or below 1309. I put the probabilities on that pretty low right now. But I've seen gold move 10 points in 10 seconds. So you never really know. Anyway, so we got the 1312s. We got those. We didn't put those trades on. We did have the 1309s. I put those on. And with my average total fill price being 90, closed out almost everything on that. All right, what else do we have? Well, this morning, we'll go in over here and we'll see. Because I don't think we're going to have a trade on gold right now for premium collection. So we're going to go over here and check out. By the way, Fridays are sometimes, unless you have some really good volatility, they can be a little more challenging on the premium collection. So if you're doing like 15 minutes, because unless there's a lot of implied volatility in, which usually there's not, then, like I said, it will be a little tougher to find good ones. So that's why we're sort of holding off on these right here, on the silvers and on the golds. All right, so, well, we had one news trade today that was on our list, potential news trades for the day. And that was the USD CAD. They had their employment change number came out. They also had the unemployment rate that came out. And so when I was looking at that, I was like, well, what are the stats on this trade? And I talked about those yesterday as being the sort of the big trade of the day for today. And I try to call these out each and every day for you so that way you're ready. We don't really have anything from Monday, by the way. But we'll do a recap of this trade when we get back here in just a few moments.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're looking on over to checking out USD CAD right here. So we had some expectations. What were those expectations? Well, the first one was the percent of the time that the USD CAD moves 50 pips when, okay, the employment change and unemployment rate come out within 2 hours. What is that percent? Well, that percent high to low, 80% of the time, it moves at least 50 pips. Okay? The average range is 80 pips. Okay? So we got basically a range of 50 to 80 with a very high probability of 50. All right? Because now remember, average range of high to low, what does that mean? Well, that means the ones that were 140 pips and the ones that were 40 pips and the ones that were 10 pips and the ones that were 200 pips and, you know, the average over the last 2 years. High to low, 80 pips. So if you take all those numbers, all those averages, and put them together, okay, you get 80. But 80% of the time, it at least hits 50. So you go in, and you buy a box spread above the market, okay? So let's say you buy like a box spread right here, and then you sell a box spread on Nadex below the market, okay? And then if it goes up or down, you can be profitable in the trade so long as it moves far enough to cover your cost. Now, I said the max cost could have been $55 if it actually moved to 80 pips. You didn't need that much money because it didn't cost that much. And I also put in a couple other disclaimers on there, okay? So things that you need to be aware of. Deviation levels will become support or resistance. Be aware. So any deviation level between 50 and 80 should be expected to be a resistance level. We had 3 of them in between it. It hit one level. It bounced off of it, okay? It took it like 20 minutes to get back up to it. It stayed there for the next like 40 minutes. That might be a good clue that is a resistance level, okay? That's your clue that you should be out of the trade. And it did go in the right direction. Both the news was negative. The unemployment rate in Canada went up, and the employment change at added jobs went down much worse than expected. So dollar CAD long was definitely the right trade based on the fundamental shock of the news report. So anyway, so as it flew up, you should be going, okay, well, ideally I take my profit at 50. Let's look at the deviation levels to see if I can take it, a little later, a little sooner. I don't want to be taking it any later than 80. So when I put all those pieces together, then I would have said, hey, at 1.0348, I should be looking to get out. So even if you got, let's just say you paid the most you could have paid for these things, then you definitely should have been out at least at break even, if not at a profit point, after about 40, 50 minutes of it taking forever to, really not even break, solidly break that 1.0348. And don't forget, we have the 10-minute deviation stop method that I often teach. I've taught this a lot of times in the past, and that's when a 10-minute bar closes above a deviation level, you put your stop right below it. So right here, we came up, we didn't hit it. This one, we hit it, but we closed below it, closed below it, closed below it. We close above it right here. So you want to put your stop just like, 5 ticks below that bar. And if it comes back down and it hits that stop, there's a good chance it's either going to go chop or total reversal. And it does. It hits it, and then it comes all the way back down. Now, could you do a reversal play? Maybe. That could be a play on that. I don't know if I would just go like right straight reversal on that. But I definitely would be using that to be a trailing stop. I mean, yeah, it would have been a great reversal play. I would have loved to say I would have done it. But what I definitely see is that's where I should have got out of the long trade. And then it retreated on back down. If you got the 10 o'clocks, they're expired. If you got the 11 o'clocks, probably much would have expired worthless. If you got the 3 o'clocks, you might be starting to move towards a little bit of profit on the other side. So, but you had a few different choices there. But you definitely had enough time to place the trade and get out of the trade at least a solid break-even or potential profit, just because that 50 to 80 pip range. So knowing your stats, this is one of the things people leave out all the time. That's one of the ways that you get one step ahead of the markets. So that's what diagnostic trading is about. It's about using fundamentals, like what news is coming out, when is it coming out, because a lot of traders, you'd be surprised, have no idea. Why did oil just move? Well, because oil inventories report came out. It comes out every Wednesday. You'd be surprised how many traders don't know that are trading oil. Okay? So being that one step ahead, that's a fundamental example. Then you go and you have, what about seasonal cycles, when things happen regularly, things like that. And then you go into statistics. Statistics is deviation levels. It's also, hey, if we combine a couple of things like the seasonality of a report coming out every so many weeks and the fundamentals of when that report comes out, it does this or this is what happens and how far it moves on average, that becomes your statistic. So you have the statistic of how far it moves, like 50 pips to 80 pips should be what I should be targeting, to a deviation level, because the deviation levels are implied volatility, statistically based levels. They're not based on historical movement. So if I put all those pieces together, I'm starting to grasp what diagnostic trading is. And it's thinking in ways that other traders don't think. It's not just following the chart, okay? Which I think, you need to trade what you see, not what you think. But you also need to think a step ahead. Not try to think not have an opinion think. That's when people say trade what you see, not what you think. That's what they mean. They mean don't have an opinion, okay? Because your opinion will get you in trouble, and you have a tendency to want your opinion to be right. So you'll sort of let your losses run and cut your profits short, because you know what? You cut your profits short and you won. Well, you were right, even if you gave up most of the potential profit by cutting it short too soon. So you feel good about yourself, sort of. And then if you let your losses run, well, maybe it'll come back. If it does come back and I was right, well then, I was right, and it came back, and I knew it was going to come back, and so I feel good about myself. Okay? So those are the games that we play, and that's the kind of thinking you're not supposed to be doing. The thinking that is wise to do is going, you know what, if it hits this level, that could easily become resistance. I need to watch for that to become resistance. Okay? It's not, I think it's going to stop and reverse here. Okay? That's not my opinion. It's just, if it hits that, it closes above it, it comes back down and hits it, then I need to get out. That's what I see. So it's thinking, but it's thinking with seeing. So I actually have to see it do it, not just think, hey, it's going to hit that and bounce. So see that there's a very small difference. Like I actually have to see happen on the screen what I think could happen, but not just assume that I know it will happen. And that's the big mistake, and not have to be right. I mean, yeah, I wanted this trade to go to the moon, but I have no control over that. I do have control over how I manage my risk and how I manage my profit. And as a trader, you have to come to the humble humility point of having an honest estimation of what you control. You control your risk. You control your position size. You control your entries. And you control if you're going to take your exits when your plan tells you to. You don't control which exit you get to take. It may be a losing exit, and it may be a winning exit. But is it the exit that was part of your plan? That is what you control. So if it goes against me, this is where I'll get out. If it goes in my favor, this is where I will get out. So those, very small pieces, you start putting them together, add up. And you start actually getting control of your trading because you stop trying to control that which you don't control, which is whether it wins or loses, and you start controlling what you do control, which is trading to trade well. And that's sort of probably the one phrase I say, I don't know how many times a week, but I'm like, trade to trade well. Don't trade to make money. You have to trade well. And if you're trading to make money, you're going to trade to be right. You're going to cut your profit short. You're going to let your profits run, or let your losses run. You're going to trade what you think. You're going to put on too big of a position size. So you're going to make all the mistakes that we make as traders because we're so focused on the money, which has absolutely nothing to do with the market. Your account balance, positive or negative, has nothing to do with where that chart is going to go next. So quit acting like it does. Let it go. Trade to trade well. Trade what you see and think one step ahead so you can see things clearly. So just like when, Steve goes on there and he plots Fibonacci levels, or when Chapman's going on and he's, plotting out his waves. So different things like that. When you go on and you get Gartley butterflies being, painted on there by Lori Pesavento, or Tiger Gartleys by, Tommy, they're thinking one step ahead, but they're trading what they see. It has to do it. It has to confirm. When this hits this, you'll hear that a lot. When this happens, then I'll do this. So they're not just, having an opinion, hey, it's going to go down. It's like, I think that if this happens, then it will go down. So I'm going to let this happen first, and then I'm going to get in the trade. And just like we did this morning, me and Steve, we hopped on, we looked at the markets. We're like, hey, S&P is going to go down. It's going to go short. Let's go ahead and short it. Where do we think it's going to go? We targeted a deviation level, is what I was targeting. He was targeting some fib levels, some support levels. They all actually happened to have confluence, which is even better. Came together. We targeted that. We went short, came down. It hit that level, nailed it perfectly. It was an excellent trade. I chose the 12 o'clock expiration. We also had the 4:15 expiration as an option that you could also have done on the trade. And I'll pull that one up here. We were going in, and I'm looking at this trade right here, and it was, 9 o'clock. We came in, the market was starting to head down, and me and him are chatting over here. And and so that was coming right on back down, and we targeted the 1686 level. When it hit that level, then we were able to wrap up the trade and have a good one right there. So and we used a reason for what strike we were picking, where we were getting out, what was our target zone, what was our risk reward, and it actually went down to hit one more deviation. It hit the 1684. But we were targeting at least the 1686 as we saw it already hit that level today and bounced off of it. So it gave us a little higher probability zone than the 1684 and turned out to be, an excellent trade. So again, putting all the different pieces together can really help you start to think a step ahead instead of always reacting. So you're being proactive and you're having a trading plan, and you should know, where am I going to get in? Once I get in, where am I going to get out to take profit? And now, I use two different methods. It depends on what trading strategy I'm using. Some of my strategies, I'm exiting when it hits a certain strike. Other strategies, I have like 7 different trailing stop triggers I use. One of those is the 10-minute deviation stop loss method that I teach. Okay? So when it closes below that, I'll trail my stops. So I don't know the exact price I'm going to get out at, but I know that when this happens, I will get out. So the entire plan is already there, because I'll tell you, once you're in the trade, it is tough. And I think all traders would agree with this. It is tough to start making a plan once you're going. It's sort of like hopping in a whitewater rapids raft and going, where do you want to go? I don't know. Let's just figure it out. And as you're going, you're like, well, you want to get off there? Oh, we already passed that one. What about there? Oh, that's already gone. It's too late. You got to have that plan in advance. So before you hop in the rapids, have your plan on how you're going to exit. If not exactly where you're going to exit, what are you going to do to exit? Okay? And you have to have those pieces. Otherwise, you're just flying by the seat of your pants, and it really usually doesn't work too well in the long haul if you do that. Let's see here. What else do we have that we can check out? Let's do a quick review of the news that's coming up next week. So you can be, just sort of thinking, planning at them. You can even look at historical charts on some of these trades that are going to be popping on up. And we got the preliminary GDPs actually coming out of Japan on Sunday night. I'll be looking at that to see if we might have a potential trade there. And it is a stronger report. So I'll check that one out. We'll come back to that. Looking on over at Monday. On Monday right there, we really have nothing major. We're going to have some monetary policy meeting minutes coming out of Japan. So that could add a little bit of volatility. Japan just has a lot of stuff going on monetarily right now. On Tuesday, you're going to have the 430 pound trade coming on out. So you can do like a straddle or strangle if you're an early riser. Nevertheless, that will cause some great volatility in the pound for that day. And that's another reason, by the way, I look at the news. Even if you're not a news trader, one to know, hey, was there good or bad news on that instrument? But also, it'll usually just cause some nice volatility. It won't be one of those markets that just sits there and does nothing all day long. So that's one of the reasons I like looking at what news is coming out on what markets. Also, over in Europe, we'll have the German zoo economic report, a couple other ones, but the German one's the big one. So that will cause some volatility in the euro. And then we'll have core retail sales and retail sales coming out on the dollar. And even New Zealand dollar is going to have their retail sales numbers coming out. We'll have a couple Aussie reports, which will add a little bit of volatility. But I'll get those news plans ready for you on Monday. If we roll on over to Wednesday, what are we going to have coming out? We're going to have the climate count change, the asset purchase votes, and the interest rate official bank votes. All that information is going to be coming out on 4:30 for Britain right there. So that ought to be a nice volatility-based play. We'll look at that one for 4:30 on Wednesday. And then we'll have the PPI coming out of the U.S. along with crude oil inventories. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, so come on back here to the Diagnostic Trading Hour. So just checking things out, looking on over at everything, and we got the yen on up here. And I was looking at the preliminary GDP, and really there's not a consistent impact. So enough to make it where we could really make it a tradable instrument. Do expect definitely volatility, but I mean, it's sort of a hit and miss. I definitely just would trade with the trend of the GDP. Should definitely drive it. You're also going to have the CGPI, the preliminary GDP price index year over year, also coming out at the same time. So the good news is you'll have some yen volatility if you're a Sunday night trader. I am not a Sunday night trader, but if you are one, then yen would be the place to be. All right, so that wraps that one on up for us. We can look at a couple deviation levels. We got the S&P moving on up, trying to fill in that gap yet again. So it's been pretty volatile today. We'll go over. We'll check on out the Dow. And on the Dow over here, moved on down to one deviation, heading up to 0.5, and it may hit settlement. And let's see, we'll go on down to NASDAQ, but right now it's at the 0.5 and may move on up. On the NASDAQ, we had that move on down to 0.7, and it is already filled in the gap at settlement. Notice again over here, these big volume spikes, often leading to the reversal in the market. So just be aware of those. That's usually a good clue, okay? for, when you cheat, we'll be looking at for potential turnaround in the market. Usually the market's about exhausted when you see those after 11 o'clock. So even right here, we got a little bit more. We got like another, 2 points on Russell. But, if you look at that drop on that big volume spike, we got one more volume spike, which basically is like we're done. And the thing turned on back around right there at the half deviation. Those volume spikes can be huge for helping you know when to tighten stops, okay? Maybe not take on some additional shorts for a moment, those type of things, because a lot of times you will see the market just flip and go the other direction. Let's see here. So a lot of times you also see velocity happening at those points. And I look at, I'll look at other things, such as I'll look at the Russell 2000's volatility index, the RVX, and how that compares to the trend, and if it's starting to change and get choppy, things like that. Let's see. We can also go over, we can look at a couple of our other markets. We got oil right now, and oil ran all the way up to 1.5 deviations, so I got settling right around that point. And we can go in, we'll pull up corn and soybeans. So we got soybeans right here. So on the November contract, so moving pretty solid right there. Let's see, what do we got on soybeans? Let me clean that up a little bit. And wow, so some nice big moves over on soybeans right there. And I'll look at it on the September just to see the current deviations. We got to get those going for November. I don't know why they're not loaded in there. But we got to move up to 0.5 and down to negative 0.5. So we got a perfect 1 deviation move on the soybean markets. And look on over corn. We might have September still up, but we need to roll on over to December. So we'll check that out. We got to move right down to the 1 deviation on the September. And let's check out the December. I think we did get those going. And December, yep. So down to 0.7 on the December contract. Right there on the corn markets. And now let's go in. We'll check out our metals there. We'll go into copper. So, and on copper over here, give it 1 second. It'll load on up. And wow. So we got some pretty big moves right there on copper. I have to load that, reload that. I think we're at a little data issue. But actually doesn't look like much at all. But little copper loading issue. So I'll just skip that one right now. And we got silver almost up 1 deviation, and we'll wrap it on up with gold's final move there. Got to move up to, see a nice move right there, up to 0.5 deviation and right back down to settlement. So right on that volume spike we were talking about earlier. All right, everybody have a great day, and I will see you Monday. Stay tuned for another great show right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.